Traders just don't get it. Really heard such, you know what it says. Trading is by far, if done right, not a 50-50 game. Actually, there are loads of differences between a casino and the stock market and blah, 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 blah. I often tell you guys that this has nothing to do with a casino. This is a career. This is not like just taking any old chance and making money. Yeah, I don't quite understand that part of the comment. I did reply to that, and I did mention that he's not the only one who thinks they can beat the market, because that's basically what you guys are thinking as traders, that you can somehow beat the market. But then I got the reply, it wouldn't work in any way. Why are there big companies out there doing it on a regular basis? Really heard such. Trading is by far, if done right, not a 50-50 game. I've been trying to explain this in every single video that I do. I even try to explain it in my live shows, and I still struggle with this. I don't know. Guys, trading is a 50-50 game. I never ever said, ever, that it's a casino. That's for sure. In fact, in every single video, I do try and tell you guys that it's not, that it's actually a difficult thing to trade, and that it's a career. It's not just pie in the sky or magic. For those of you who don't know me, I'm Rob. And for those of you who do know me, I'm still Rob. It's Coffee with Rob. Today I'm going to answer some of your questions. I'm going to look at some of these comments, and we're going to discuss if the market is a 50-50 game. I've had a few interesting comments. The biggest one being that. And then, of course, I've had this comment on demo and prop firm trading. This comment reckons you should only use a demo account, but then the reply is, I would clarify that you shouldn't stay on a demo for very long, for sure, as that doesn't give you the psychological aspect of having real money left on the line. But I disagree about telling people to buy prop firm challenges, especially in the light of how restrictive the rules are straight away, when they are likely they will just keep blowing them over and over because they don't know how to trade, even semi-profitably, blah, 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 etc. Okay, so at the end of the day, as I say, and as I will elaborate, that yeah, I get that, but if you put real money in the account, aren't you gonna lose money as well? So you can't stay on a demo account forever, because you're not gonna win money there, and if you put real money in an account, then you're probably gonna lose that too. So, I think the lesser of the two evils is probably the funded account, but we'll discuss that. Only use a demo account. Should you trade with a prop firm? Should you have funded trading? Well, as I've said to you guys in so many videos, and clearly this person doesn't watch all my videos, because how many times have I said I spent most of my career, all 33 years, on cash and trading with my own money. In fact, we didn't even have leverage trading in the beginning, and I didn't believe in prop firms when they came about until the beginning of this year. And as I've said over and over again, that it dawned on me that some people just might need an entry into the market because they don't have the capital to get started with their business. How many times have I told you guys that this is a business? This is not a casino. This is the real thing. I don't know why that first comment mentioned that it's a casino. Like I said that. I did not. For one thing's for sure, this is not a rant, guys. I'm just trying to help you guys. And I'm trying to say to you guys that this is for sure a career. This is really difficult. What I'm trying to tell you guys is it's not easy. I had another comment which I haven't put up, where the person basically said, don't believe this guy, the figures aren't true. I get the feeling that traders don't want to believe that trading might be hard, that trading might be risky. Guys, trading is inherently risky. Most traders lose money. If you don't like losing money and you don't like risk, you probably shouldn't be trading. You know, if you don't like risk, just move away from trading and rather just do something else. I have a nice question from Mohammed with regards to how you can place his risk on the markets with his funded account that he's got, his 10,000K challenge account, the 7% drawdown, and he's asked how we can attend to that. So I think we'll attend to that towards the end of this video We'll just go over it and we'll have a chat about how we manage our risk. But let's attend to the first comment, which is how do we go about explaining to you once again that the market is a 50-50 game, that the market's a 50-50, and that you don't make money from a system, you make money from a strategy, that at the end of the day, the squiggly lines don't make you money and win rates don't make you money. You see what's happening here? The mindset is still stuck on the fact that you make money from the squiggly lines. You make money from a system, from charts. And the main reason I think for that is because you went on a course, you paid a lot of money for this. And it's the psychological thing of, I'm so deep in now that I don't want to believe that that might be wrong. I don't want to believe that I've paid so much, I've invested so much into this. And now you're telling me that it's really got nothing to do with the squiggly lines, that it's actually about me, that it's actually about my psychology that's going to make me the money in the markets. And that's the difficulty that people are struggling to get around. The markets are 50-50 because the markets are made up of human beings. The markets are made up of people, not squiggly lines. At the end of the day, if you were trading against squiggly lines, in all likelihood, you'd probably lose. The point is that traders don't want to accept, they don't want to accept the possibility that they might actually be in a 50-50 game. That they've actually been told that their system's going to make them all this money when it's not. Nobody wants to believe that they've paid $5,000 for a course and it's just not going to play out that way. You see, if I was to toss a coin 10 times, heads or tails, in all high probability, it would land on tails 5 times and it would land on heads 5 times. You'll all agree with that. The point of the matter is, if I was to tell you, if you chose heads, I'll give you 2 for every one that lands on heads, and I'll take away 1 for every one that lands on tails. There isn't a person in the market that wouldn't take that trade. Absolutely everyone that I know would take that trade. It's 50-50. You can put lines on the chart, you can take lines off the chart, you can do what you like. Every single system in the market works. Doesn't matter what system, they all work. It's how you apply the strategy to the high probability system that you're using that's going to make all the difference to your trading. The second part of the comment, which was interesting, is why do all the big companies use this system? And well, they don't. They don't. They literally don't. Think about this logically, just for a second, since you're in logical trading. The people in the big companies are not beginners. They're not novices. They're not people who started yesterday or last year. They're qualified brokers. You're not going to get a job as a trader in a big institution without qualifications, without some serious qualifications. And every pro trader that I know that has those serious financial qualifications doesn't use squiggly lines to trade. They all use the fundamentals. And they don't just buy willy-nilly. There's usually some control and some agreement as to what they're buying and what they're selling, because they're either creating or looking for liquidity in the markets. They don't have stop loss. They don't work the same way as a retail trader works. All these systems are built for you as a retail trader to try and find that liquidity in the market, to try and trade around this game. So don't think that the pros are using the same system as you, because they're not. They're way ahead of you. They've got information before you could even dream of having that information on any given trade. These guys are well educated in the markets. So don't compare yourself to them. You cannot. So on that front, no, they're not trading with the same system as you. So don't say, how come these guys are doing it? No, they're not. And in fact, the most profitable company on the street was only winning 20% of their trades. The most profitable one was only winning 20% of their trades. Now ask yourself the question, are they using the same system as you? Then I'll ask you, are you winning 80% of your trades? And if you are you profitable doing it? Because most people who say yes are either scalping or they're taking tiny little profits and making big losses. In other words, you make $10 on each trade for the 8 trades, and then you lose $1,000 on the 9th trade. Effectively, that's where it ends up just about every single time. Then I get to the comment of the demo, and it's a great comment and a very interesting one, because I must say, guys, the first one, no name, no sort of information, blank account, hiding behind a keyboard. Guys, if you want to comment, please try and at least be some human being or someone out there that stand behind your policy or your comment. At least have a name on your channel or something, unless you're another trading channel that's just trying to hide or something. I don't know. But guys, if you're going to comment like that and we're going to discuss it, at least have a name. The next one is, of course, the argument of the demo account. I agree totally that you need a demo account to start with. And where you disagree that you should have a funded account, or a beginner should have a prop firm account. And I get that too. But where we have to go with this is the squiggly lines are not what make you money. While I agree that you do obviously need a bit of a demo account to start with in the first maybe couple of weeks, get a feel for the charts, get a feel for how to trade, how to buy and sell, and maybe even have a demo account running in tandem with your real account just to, go back on and that sort of thing. I agree with that. But the problem you face is this. The demo account won't give you reality. So while it'll teach you the system, which I can teach to a primary school child, and as you know, I always say the markets are 50-50 anyway, at the end of the day, that's not going to help you much. What you're going to get is how to take a high probability trade. So now you've learned how to take a high probability trade. You come home from your $5,000 course, you're all excited, you start trading, you start losing, and you wonder why. And it's generally because you've got, when you're doing the demo account, you've got nothing on the line. But when you've got a real account, you got something on the line. Now, the only reason I warmed to funded accounts, and I'm not saying anybody has to buy a funded account. The way it was worded is like forcing you guys to buy funded accounts. Definitely not. As I've told you over and over again, and as I said earlier in the video, how many times do I need to tell you guys this? I was totally against funded accounts. I only warmed up to them this year for the simple reason that I just feel that it gives some traders an opportunity to get an entry into the market. And if you're a beginner, what better way to start with real money than throwing hundreds of thousands in cash at the market and then losing that money? Because you know who's going to get that money? Someone like me or a pro trader or someone else. Whereas if you buy a little funded account, all you're buying is $100, $200, whatever of an account that you might lose, but at least your loss is limited to that account that you paid for. And it gave you some experience, some real experience, because you had something on the line and you had something to work towards. That $200 that you lose, that $100 that you lose, that $500 that you lose could easily have been $100,000 that you lost. Could easily have, okay, let's say 20,000, let's say 50,000. Still a lot of money compared to a couple of $100. So I'm not promoting funded trading as a whole. I'm promoting the ability for you to get an entry into the market without taking huge losses. Do I trust them? Of course not. I've told you guys over and over again. I don't trust prop firms or funded trading or anything to that effect in the long run. All I'm saying is you can use it for your benefit. You don't have to. If you want to risk all your cash, be my guest. Do it. It's up to you. It's your money, not mine. I'm not losing anything. It's up to you. Just saying that there's this opportunity for you to learn from. When you say, don't teach people to have funded accounts, I'm not. I'm just giving you the opportunity and saying, there's a way for you not to lose all your money. just a thought. Use it, don't use it. I'm not saying that you should buy one. And if you do want to buy one, of course, I've got links in the description for you to get to it, to get to the type of account that's not going to hold you to those strict regulations, because the ones that are in my description allow you to trade exactly the way we do. You can hold the trades overnight. You can hold the trades over the weekend. You can trade through the news. You can basically do what you want with them. It's up to you. All I'm saying is, and then if you make a profit, take your money out. I'm not saying this is the best idea in the world. All I'm saying is it gives you something to work towards. Because if you just go straight into the market with all your cash after a demo, in all likelihood, you're going to lose all your cash. That's all I'm saying. As I've said to you before, this is not about the markets being a casino or not, or the markets take time to learn. And in all probability, it's going to take you a couple of years to become a profitable trader. What better way to do it than risking somebody else's money rather than yours to get started with? That's all I'm saying. All I'm saying is don't risk all your hard-earned cash immediately, because there's a good chance you're not going to make it. Because as the first guy said, I'm wrong that it's a 50-50 market, because traders just don't get it. They want to believe, no matter how many, because there's so many people out there telling you you're going to make $1 million in a day. So they want to believe that it's impossible that the market can be 50-50. It's impossible that you're going to take more losses than wins. That's how they believe. The brain just can't seem to compute that that's not true. That at the end of the day, you're probably going to take more losses than wins. And you're going to have to learn to become a good loser. Let's get to Mohammed's question. Mohammed's question is, hi Rob, if I buy a 1,000 US dollar funded account, tell me the trading plan. My maximum drawdown is 7%. Then how much should I risk per trade? Yes, let's talk about that. Good question. How do I work this? As I've said in all my videos, I risk 1% of my account on every single trade, and I keep the risk the same on every single trade. But your dilemma is, my drawdown is 7% on a $10,000 or $100,000 account. How much do I risk? You still risk 1%, but you take less trades. So what you've always got to keep in mind is that I can only lose 7% of my account. How much is that on $10,000? It's $700. So my risk that I got to protect is $700. In other words, I can't take more than 7 trades without losing my account. Because if you're risking 1% on every single trade and you take 8 trades, then you're going to blow your account if they all lose. So what you do is you take, say, 4 trades or 5 trades on that account. Maybe rather have 1 or 2 other accounts open at the same time to cover you. That way, and just be careful of the daily drawdown, Mohammed. You might have a problem with that. The daily drawdown might be 4%, not 7%. You've got to watch out for that as well. Watch your daily drawdown. Because if you go over your daily drawdown and you lose all those trades in one day, you're going to blow your account. So try and manage your risk based on your drawdown, but manage the overall risk based on the overall account. So in other words, 1% of the account. So you'll be risking $100 per trade on a $10,000 account. Don't risk more. Don't risk too much less. Try and keep it the same on every single trade. And if your daily drawdown is 5%, that's $500. Don't take more than 5 trades, because then you can lose all 5 trades in the same day. Unless, of course, you can take 1 or 2 of your trades and manage the risk back up the cost, then you're managing that drawdown risk. So you've got 2 types of risk to manage. You've got the overall account risk, and you've got the drawdown risk to manage. And you've got to manage both of those together. But generally, I find that if you trade with 1% of your account, then you're normally quite clean and quite okay with that. So guys, that was today's comments. I thought I'd just go over that a little bit. I do hope that in some way or another, it helps for you to understand that it's a 50-50 account. Mohammed, if you want to know more about the risk strategy, just watch all my other videos. My risk strategy is at the end of every single video. That's all there for you. And you can get all the information you need off of those videos, let's say. Guys, don't forget to subscribe. Thanks for watching. And until the next one, cheers, ciao, and Bye.